I went ahead and started the recording, everyone, just so that you know. I'm sure a little pop-up happened on your
So
screen.
in order to be able, you have to click on continue, and that means you accept being recorded.
Yeah, your other choice is to leave the meeting, I think.
Yes, that's right. Okay, Earl?
All right, let's get started. I'm Earl Stalen, and I'm the chair of the Rocky Mountain Public Banking Institute, which is a 501c3 nonprofit that has been working on public banks in Colorado for the last 6 years. And I'm also with the Colorado Public Banking Coalition, which a number of us here tonight are also on. I'd like to turn this over to Katessa Robertson, who will be coordinating the logistics of this event, and have her introduce herself.
Yeah, hi everyone. My name is Katessa Robertson. I am a student at the University of Denver. I'm studying to get my master's in social work with a concentration in ecological justice. I'm also on the board of directors for 350 Colorado, and I am involved with the Colorado Public Banking Coalition. I'm going to be helping moderate this event. I'm going to be monitoring the chat and doing some tech support. So anything along those lines, you can send me a chat and I can help you out. Just some things to know. You can save the chat. We'll have a lot of helpful info being sent through the chat by clicking on the 3 dots next to the chat and then clicking save chat. That'll save directly to your computer. If you have a question, please use the reaction function and click raise hand, and that'll pull you to the front of the screen so that we can call on you and you can ask your question. And you can also send questions in the chat as well. At the end of the presentation, oh yeah, please save most of your questions for the end of the presentation, or for the end of each person's presentation, sorry. And then we'll have the Q&A available after the event as well. We'll send it to you in email if you would like to have the questions and answers afterwards. And then we're also going to have the recording available on our website after the event. And with that, I will pass it over to Alec to introduce himself.
Well, good evening, all. My name is Alec Tsoukatos, and I am the vice chair in the Rocky Mountain Public Bank Institute. And I'm a retired economist after 50 years of teaching at Regis University in Metro. So I'll be introducing our 2 presenters. And I'll start by saying that the idea of a public bank is new to most people. So one of the suggestions people have sometimes made is to have an actual expert in public banking talk to us, rather than having people say what they believe or what they've heard, but to actually hear it from those people that we can trust. Well, today we have 2 experts in public banking, both from North Dakota. First is Eric Hardmeyer, the most experienced public banker in America. Eric was president of the Bank of North Dakota for the last 21 years, retiring a few months ago. Before becoming president, he started at the bank in an entry-level position and advanced through various promotions before being named president of the bank in 2001. During his presidency, the bank has been remarkably successful and beneficial and made North Dakota the only state to weather the Great Recession without recession. Isn't that something? Achieving record profits each year instead. Unfortunately, he has had a medical issue with his voice recently that came up after we scheduled the meeting, and that he and we hoped would go away as it had previously. However, it has persisted. Nonetheless, we are most fortunate to learn that an excellent video is available of Eric talking about the Bank of North Dakota to a public banking group in New York in 2021. In the video, Mr. Hardmeyer answers many questions that the people in New York State had about public banking, all of which apply to Colorado and other states. So we will show that video instead of having Eric speak live, even though he's with us in this webinar. After the end of the video, I will ask Karl Bollingberg to also speak to us, but in his case directly, since he's here with us today, and I will give you some background about him once we finish with the video. So Contessa, can you pull down the video for us,
I'm going to pull up the Public Banking Made Easy video by the Public Banking Institute first. It's just a little 3-minute one. There we go.
In this city, in anywhere USA, the residents of this city have decided they want a park. The city council agrees the park is a great idea. But how will they pay for it? The city needs to borrow money. But borrowing money means the city has to pay a lot more money in interest and fees that could double the cost of the park. And that money leaves the city. It goes to Wall Street investors who really don't care about the park or the city at all. This is a bad deal for the city and its residents. There's a much better option, an option that's been proven around the world, a public bank. A public bank is a bank owned by the residents of a city, state, region, or territory. Private Wall Street banks just want to make profits for their shareholders. But public banks have a mission to serve the public good. They have to reflect the values and needs of the community. And that makes all the difference. Politicians don't run a public bank. Their job is to just set it up by listening to what the people need and want. Public banks are run by skilled local bankers who know their neighbors. Residents are on the supervising board, tabs on what the bank's doing. Public banks can save communities lots of money. First, they cut out expensive Wall Street fees, which can be hundreds of millions of dollars a year in a big city. Second, they can lower interest rates on the city's loans, which means there's more money to spend on other projects. Third, their profits go back to the city, not to Wall Street. So a public bank can make money for the city. All this means the people of the city have a lot more money to fund all the things they need, such as bridges, good roads, good schools, renewable energy, affordable housing, lower taxes, and the park the people wanted. They now control their own money and they can build their own future. Join the movement. To find out more, go to publicbankinginstitute.org.
Okay, so hope you all enjoyed that little introduction on public banking. Do you all want me to go ahead and play the Eric Hardmeyer video now?
Yes.
Yes, if you could speak up a little more, please.
Okay. Just sharing my screen, and here we go.
Been fascinating to listen to the presenters. Let me just by background tell you a little bit about myself and a little bit more about the bank, and then I'll get into the specifics of the Bank of North Dakota. As was mentioned, the Bank of North Dakota has a history of 100 years. We were created as part of the progressive movement that swept at least the upper Midwest back in the 1900s, early 1900s. North Dakota was led by a very charismatic individual by the name of A.C. Townley, who gathered up groups of disgruntled farmers, was successful in creating a third political party in the state of North Dakota called the Nonpartisan League. They gained control of the legislature and then passed sweeping industrial resolutions that created not only the Bank of North Dakota, but it also created what is now known as the State Mill and Elevator, which is the largest single mill and elevator in the country. Along with that was what is now called workforce safety and insurance. So at the time, 100 years ago, some of the discontent that I'm hearing in New York, it was similar to what we were experiencing in North Dakota. Deep disregard and skepticism of the big, large money center banks, the big elevators, out-of-state entities that really, I felt at the time was controlling North Dakota's destiny. And so that really was the idea of this progressive movement, was for North Dakota to take control of its own destiny by creating its own ability to lend money and by the ability to market and add value to grain. And so here we are 100 years later. I have been personally at the bank for 35 years. I have been president of the bank for 21 years. When I came to the bank in 1985, it was about a $600 million bank. Today, we are about an $8 billion bank. We have set record profits for the last 16 years. 2020 was not as successful because of issues, as you all are aware of, but it was still the top 5 most successful year that we've had. Our mission, 100 years ago, remains as it is today, and that is to finance economic development throughout the state of North Dakota. So that's our primary mission. And with that, we are giving a lot of latitude to creating programs and to work with the business community and the banking community to really hone in on how those are best met. So let me describe a little bit about how the bank works and some of our responses, how we think about economic development, how we go about doing it. And also let me just say at the very front end of this, I will not advocate publicly for this model, although I have spoken to at least 30 to 40 different states. I've been to numerous states talking about this. I find that this is a contentious issue wherever I go, the idea of a public bank, and I leave it up to the local jurisdictions to find out whether this is something that they are interested in going forward with or not. So I will not advocate, but I will educate. And for North Dakota, many of you know, is a red state with a very socialist institution, the Bank of North Dakota and the Mill and Elevator. Would they be created today? Maybe unlikely, but I think that we have now become such a part of the state and such a part of the economic efforts that you would be hard pressed to do away with the bank. In my course of 35 years, I have seen a couple of attempts to stop the bank, to turn it back over to the private sector, but it largely doesn't go anywhere. Because I think as you'll hear me describe, it is really ingrained as part of the state of North Dakota and our history. And the fact is, it works. It works very well in our state. We have a unique model that may not be the same model that other states choose to implement if they go forward. But for BND, it works, and it works well. Our model really is, in addition to financing economic development, we also operate as what's called a banker's bank. And that is, we support the local banks. One of the stats that I saw earlier was we have more banks per capita than any other state. And I think largely that may be in case because of the Bank of North Dakota and our ability to help those businesses and those banks leverage the Bank of North Dakota and leverage our assets to go forward. So what is a banker bank? Basically, just like individuals, banks need access to banking services as well. So we do normal things that a correspondent bank would do. We clear checks for our North Dakota banks. We do safekeeping. We do bond accounting. We do Fed funds clearing. We provide liquidity to banks. We provide them Fed funds lines. Earlier it was mentioned Fed funds are Feds sold by the Federal Reserve to banks. We do the very same thing for our North Dakota banks. We buy and sell their liquidity from them. And we have found that over the course of our history, we've grown very close to our North Dakota banks. And in fact, they serve as our delivery channel. The Bank of North Dakota originates very few loans outside of a robust student loan division. Most of our lending is done in participation with a local bank. We believe that economic development is driven locally. Those banks certainly know their customers, know their businesses better than we do. And so what they do is they work with their customer, utilize the Bank of North Dakota's programs, of which we have many that they can choose from. We have programs to help entrepreneurs start up. We have programs for middle market, and we have programs for large Fortune 500 companies that are looking to come to North Dakota or to expand in North Dakota. So we do a little bit of lending in each area. We determine what those areas are by continuing to understand the economic landscape of the state of North Dakota. We visit with economic developers, we visit with bankers, with state officials to really understand what are the needs in North Dakota. How can we serve those needs? One of the things I was asked to respond to was, how did we do during COVID? What did the Bank of North, what was our role? And I would tell you, similar to what we saw the firefighters do, after 9/11, that's how Bank of North Dakota thinks of itself is we rush in to where the disasters are to see where we can help. Most banks would take a very hands-off approach, a very conservative approach, kind of let the dust settle, figure out where they should play. BND, on the other hand, because of the unique nature of what we do, that we are instrumental, I think, in the success of our economy. We are used to really getting in, rolling up our sleeves, finding out what the needs are, and then meeting those needs. Now that doesn't mean that we're not going to do our homework. In the case of COVID, we offered 3 different programs to small businesses outside of, the PPP program. We recognize, having dealt with financing disasters for, 30 to 40 years, that there is a role for the bank. But what we didn't want to do, and what we will not do, is duplicate efforts. If we understand that the federal government, the SBA, FEMA has a role to play in providing assistance to local businesses, we're not going to come in and duplicate that effort. Instead, we're going to see where the gaps arise and seek to fill those. So that is really our mantra is to be patient and to understand where the needs are so as to be as efficient as possible. I've been asked to talk a little bit about infrastructure. The Bank of North Dakota is a state agency on top of being, a state-owned bank. So I am the head of an agency, the Bank of North Dakota. I go to the legislature every 2 years when they meet. I present a budget that gets approved. And along with our programs that we develop on our own, we also have state-initiated programs that legislators may devise and ask for us to work on. Infrastructure has become a significant part of our growth of the state. as we've gone through several energy boom and bust cycles, building out our infrastructure, whether it's roads, buildings, or water projects, flood diversion. BND plays a role in administering, billions of dollars worth of programs to the state. We also act as the state agency's bank. So we will provide liquidity to other state agencies that need it. Our Department of Emergency Services knows that if they need quick access to money, overnight, we can get them money to meet their needs. There's a lot of different directions that I could go. I'd be interested really in answering questions that you may have. I know that there are some questions that I get in every one of these. And let me just answer a few of those off the bat, and then I'm happy to take questions. First of all, are we FDIC regulated? Are we insured by FDIC? The answer is no, we are not. We're not regulated by any OCC, FDIC, any entity at all. In fact, we are examined by the state Department of Financial Institutions, but they do not have any authority or exercise power to do any types of mitigation at the bank. How are we funded? Well, the Bank of North Dakota is unique and different from other states in that we have what's called a treasurer that is very weak in its duties that it has compared to other states. By law, all deposits collected by the state, all income tax, all fees, all sales tax is automatically deposited at the Bank of North Dakota. Those become our core deposits. That becomes the nucleus of our funding and how we have the ability to make loans to other entities. We also have access to the Federal Reserve. We are a member of the Federal Reserve. We are a member of the Federal Home Loan Bank. We have the authority to issue bonds if need be. But we have, at this point, sufficient liquidity and alternative funding sources to fund all of our needs. We also, because of our profits, we are able and willing to provide what's called a dividend back to the state. So every 2 years, we get into a discussion with the legislature on what might be an appropriate amount of our income or our dividends to transfer back to the state. Today, we are contemplating a 50% dividend philosophy, which means that 50% of our dividends could be transferred to the state. 50% of our profits, I should say, could be transferred to the state. The rest is built for capital growth. And today, the Bank of North Dakota enjoys a strong capital position of 12%. Our return on equity is upwards of 15%. It's been as high as 22%. And so with that, why don't I stop, answer a few questions, and we can see where it goes from there.
It's great to be talking to you, Eric Hardmeyer, our hero. And it was a great presentation. Thanks, everybody. So you said that if an agency needs liquidity, you provide it. What interest rate is that? And is that a loan, or what are the terms for that? Sure. Sort of loan? Yeah.
So it would be really what we use as an index for state agencies is we use the Fed rate. Today that's 1/4%, and we mark it up some to meet our overhead costs. So state agencies borrow at a rate from us somewhere in the neighborhood of 1.25% to 1.5%. I should say that not only do we provide a low interest rate to state agencies, But one of the other things that we do is we are and have been in the student loan business. We believe that education is a important part of the evolution of the state of North Dakota, the economic development of the state of North Dakota. And so we have provided student loans to our residents, since the early 60s. In fact, we were the first bank to make a federally insured student loan in the nation. And today, you've heard of SoFi. The Bank of North Dakota actually was the first to offer a total student loan refinance program. And today we lend money to student loan borrowers at a rate of 1.75%.
Wow.
Yeah, and so they have options of fixed or variable rate. So the nature of the bank, its low cost of money, is something that we do utilize to encourage economic activity. And we do, provide that to our borrowers as well. We just simply take our cost, add something for overhead and profit, and get the money out as inexpensively as we can.
And where do you get the liquidity? Do you get it from the Fed? Do you get it from the Federal Home Loan Bank, or you've just got it there in your deposit base?
Well, today, along with a lot of other banks across the country, banks today seem to be flush with deposits. But as I said, our nucleus of our deposit, our core deposits, come from state tax collections, income tax, sales tax, fees. But we do, as I said, have access to the Federal Home Loan Bank, the Federal Reserve. Our banks today are flush with liquidity. So they are selling us their excess liquidity. We have $1 billion of deposits from other banks on our books today.
Well, thank you so much, President Hardmeyer. I just wanted, as we're looking to pass the legislation in New York State to really enact public banks on state municipal levels, I wanted to give the opportunity for the electeds that we have on the call to ask you some questions, since you know how to get it done. I have State Senator Jabari Brisport.
Eric, thank you so much, by the way. That thing that you took the time to be with us over here in New York. But I guess I'm curious how, if any, interaction the Bank of North Dakota has with private banks that exist, what the competition is between you, and how you navigate that.
Yeah, that's the critical part of our success is, when you think about the bank and its 100-year history, I would say that, we were maybe one of the originators of the PPP model, the private-public partnership. So our whole model is built on partnering with banks, not competing with them. So the economic development loan programs that we have are all done in participation with a local bank. So the local banks originate the loan, service the loan, and sell a portion to us. And typically what we will do then is, we will reduce their risk into any one venture, allowing them to leverage that relationship, make more loans available. It allows that bank to operate at a size and capacity of the Bank of North Dakota. Some of them may have a legal lending limit of, $1 million, but because they are participating with us, they can access our full lending capacity, which on a bite-sized transaction would be in excess of 150 million. So we think of the banks as our partners, and they are our delivery channel of our programs and not our competitor. And I think if you look at, one of the 2 or 3 hallmarks of what has made BND successful, it is that model. It is the fact that we're not going to compete, for their customer. That's their customer. They have the relationship. They know them. We have no interest, no desire to have a direct relationship with that borrower, and think it would be counterproductive towards, the model. And, if we ever get backlash, it's because we may have entered into an area that does, compete with the private sector. A few years ago, we entered into the mortgage space. After 2008, 2009, there were underserved areas of the state where they just simply could not get a mortgage. So BND went to the legislature with the backing of our trade institutions and said, you know what, this is an area where the Bank of North Dakota can play. We can make mortgage services available in rural parts of the state that just simply don't have access to the market. So they now are able to get a home mortgage loan at the same rates of anybody else in any other community, using the Bank of North Dakota as the originator in that case. But we did it, with the full backing of the banking association. So it's a very mindful strategy to work with the banks and not compete against them.
Mr. Hardmeyer, really appreciated the traditional private banks are leaving. Is there a model either similar or within North Dakota that does that kind of stuff to sort of either create the space that maybe a credit union for whatever reason can't keep up with, or that the private sector has sort of just simply threw their hands up in the air and abandoned?
Well, yeah, so that's a really good question. So as we've thought about the bank, you already described our economic development efforts. But what we really are not is the retail bank. And I think that's what you're talking about. So you can't come to the Bank of North Dakota, for example, for a car loan or a boat loan or, a personal loan of any kind, other than a student loan. So, we've set that aside and said, the private sector for the most part is handling that. We are just really interested in, what are the gaps that we can fill, and certainly, business startup is a huge area of interest for the state of North Dakota. We are, primarily an energy and ag state, and we go through the flows of commodity prices, and it's feast or famine in North Dakota. And so what we have recognized for literally decades is that we need to diversify North Dakota's economy. We need to have programs that help entrepreneurs start up businesses, because that's the lifeblood. And that's what I hear you talking about in New York as well. It is really the opportunity for entrepreneurs to get access to funding. And not only do we run, our own, loan programs, but we also have a venture capital arm where we have the ability to make, equity investments into businesses as well. And we're mindful that we're not investing into a company directly and turning around and lending to, a company that we bought an ownership interest in. So, it's an interesting model that we run. And I'm sure, as I've mentioned, every state, if they choose to go down this path, will have something unique for their state. What is it that you're trying to solve? If you start with that idea first, what are the problems? What are the gaps? What are you trying to solve, rather than trying to be everything for everybody? I think that gets you where you need to be. And the biggest pushback that I've always seen is the pushback from the trade associations, from the banking communities are afraid of unfair competition. And so we've really structured the bank in a way to eliminate or diminish as much as possible that opportunity to compete with the private sector, but rather to help them meet their needs.
The one of the concerns that, and again, when I was president of the State of New York Mortgage Agency, and also heading up New York State's Minority Business Program, and then New York City's Minority Business Program, has to do with the lack of access to capital, particularly in the Black community. And it is something that, and in working with Senator Saunders and his staff, we obviously tried to focus upon. It's not obviously not just the Black community, but historically and systemically, the Black community in any type of initiative winds up being in the lesser mode. My question for you, Mr. Hardmeyer, I know there's not a large Black community in North Dakota, but I would imagine the largest non-white community would be the indigenous people who live in North Dakota, and who are always living in what's now North Dakota. And the question that I would have is, are there any special, targeted, I don't want to say special, any targeted initiatives that the Bank of North Dakota has been able to develop to provide some focus there, because that might give us some guidance as to how a public bank here in New York State could perhaps follow best practices that you've adopted over these many years.
Well, thank you for that question. Yeah, over the years, we have developed programs that were, encouraging, our Native American reservations to take advantage of economic development programs. And really what we found is a opportunity of North Dakota businesses who are looking for labor. The reservations are, suffer a lot of problems with unemployment. There's health problems that you would have seen on many of the reservations around the country. All of those have plagued North Dakota as well. But where we have worked is to develop programs that encourage businesses to work 1v1 with the Native American populations to access employment opportunities. We have lent, many times to the tribes themselves for manufacturing facilities, manufacturing opportunities. And I would say that it's not so much a singular effort to work on the reservation, but more of a statewide attempt to bring us all up rather than just segments of our population. But again, we found that, it's economic development is all locally driven. We could put the programs out there, but there has to be local initiative. And that's what we've done. So we've worked separately trying to get liquidity onto the reservations. We have found that they still continue to be underbanked and underserved, and are willing to work with CDFIs or whatever the nature of that lending entity might be to provide our credit, where we can do the most good. So, to answer your question specifically, is there a targeted program to help minority and Native American populations? The simple answer has been there has been, but today it's more of a statewide effort to help the state as a whole.
Ms. Donovan, I just have a follow-up question, very brief one, which is, in another life, I worked as an investment banker and worked actually with the Navajo Nation for a couple of years, which of course is one of the largest in the country. And its asset base is a lot larger than many that you might find in North Dakota. But what I was hearing you mention has to do with employment and consumer issues. But on the business development issues, is that something that you've been, obviously, obviously in some ways, the indigenous people would have to initiate that. But is there some way that you might be able to, the Bank of North Dakota might be able to encourage that? Again, I'm asking the question, not just with respect to North Dakota perspective, of course, but how, when we will have a public bank in New York sooner than later, how that bank could follow your best practices.
Well, yeah, it's a complicated issue. Lending on the reservation is, takes a little bit of a unique experience to do that. Many of them, of course, have their own sovereign immunity. What we've really asked for of the Native American community is to adopt, the commercial uniform code, so that lending practices can be done on a basis that are fair and equitable across. And so that is one of the issues. I've been president of the Native American Task Force, part of the Banking Association, to really work hard to develop more liquidity, more programs on the reservations. And it really starts with understanding the unique needs, getting some adaptation of the Uniform Commercial Code, so that banks can understand the lending methodology in which they're going to work on reservations. And that, I think, has been the largest single barrier to liquidity on the reservations, is really the adoption of the Uniform Commercial Code. And once that happens, I think capital goes to where there's a return, and you will see opportunities arise on reservations. I've dealt with it for 35 years, trying to work diligently to make that available. But it's not easy. I'll just freely admit that. More can be done, more should be done. And it's a problem that needs to be solved.
Could a union meet their banking needs with a public bank? For example, if they wanted to divest from a Wall Street bank? I guess a similar question was, does the Bank of North Dakota have access to the retirement funds of state unions?
Of course, the way I started this is that what works for North Dakota may be different for other states. And so, if there's a place for, the unions in New York's state banking model, I would say that's certainly a call that each state would make on its own. So, we don't, although we have the only public banking model in the country, certainly I think what's going to come out of this are many different types of applications of this model. So what may be right for North Dakota may not be right for New York, and vice versa. So, I think that would be something that each state has to wrestle with on their own, what they want it to be. In terms of accessing, pension funds, no, we do not. We do not have readily access to the state pension funds, although the Bank of North Dakota has in years past administered certain parts of their fixed income portfolio where we've managed that for them. In one case, I will tell you that the state of North Dakota has put together what is called the Legacy Fund. And that is, today, the state of North Dakota receives 10% of all revenue, oil taxes that are collected come to the state of North Dakota. That is collected by the Legacy Fund. Today, that's about an $8 billion fund. When that started, all of those monies were deposited at the Bank of North Dakota. And so we quickly outstripped our ability to handle a deposit of that size. But most of those funds, the legacy funds, the state pension funds, are managed by professionals outside of the state. And it is an area of, I guess, quite a bit of discussion in terms of, just as you brought up, why are all those fees being paid to out-of-state, hedge funds, pension funds, professional managers, when North Dakotans could manage some of those funds just as well. So it is an area that we are discussing as a state today.
Eric, I did want to ask you a question. Here in New Jersey, the big pushback is that the State Banking Association, all the bankers said, we're against it. And we're going to lose our municipal deposits, even though we told them that it's not in the bill. But that is one thing. In North Dakota, despite the being flush with deposits, our municipal deposits shunted into local banks.
Walt, that's a great question and a good point to make. I was in New Jersey a couple of years ago and spoke to the New Jersey Bankers Association. It was not well received by the Banking Association. They were polite and cordial, but I knew, up front that I was in hostile territory. And it largely was around that particular area of municipal deposits. When the Bank of North Dakota was created 100 years ago, all municipal deposits and state deposits were legally required to be deposited at the bank. In the early 1930s, an initiated measure was passed that eliminated the requirement of political subdivisions to have to deposit their monies at the bank. And so, the New Jersey bankers were really upset about that particular issue. And I said, well, look, that's not how it works in North Dakota. We're not after the municipal deposits. We know that's a big source of income for community banks for deposits. We're just not simply going there. We have enough with the state deposits. So it was a point of great contention with the New Jersey Bankers Association.
I want to underscore the fact that this is a collaborative effort, that we're here to support these efforts in states across the country. And also what you've gotten from a lot of the comments is that we have the ability to actually craft this in a way that makes sense, that rises to the challenges of this moment. So while we have the privilege of being able to speak with President Hardmeyer in person about the experiences and his knowledge and expertise from North Dakota, and you have folks who are parts of coalitions from across the state, but one thing is that it really does become what we make it. And so we have the ability to really craft, whether it's at the state level, a public bank, or the municipal level, to really craft a system that meets the challenges of this moment, but also one that is aligned with the values of the kind of society that we want to build. And that is more evident now than it's been in the past. As we've seen with COVID, it has really simply unearthed or brought to light issues that are longstanding, inequities that are longstanding, communities that have been marginalized. It really has just exposed those in a way where we cannot ignore them. I want to defer to Senator Sanders. I know we have limited time, but I wanted to underscore what Walt is saying about the Public Banking Institute being just really.
All right, everyone. Thank you so much for watching that video. I'm going to pass it over to Alec now. Or Earl, I'm sorry, Karl. One of you two. I'm sorry.
Yeah, me, Alec. Yes, this was really wonderful, Eric. I was taking voluminous notes and essentially saying yes, 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 yes all the time. So thank you very, very much for that contribution. I'll go to Karl now, and then maybe we can come back to some of the issues that you brought up in that speech. So Eric kindly contacted Karl Bollingberg, an experienced but retired officer of a community bank in North Dakota, who has many years' experience working as a private banker with the Bank of North Dakota, and arranged for him to appear with us via Zoom. Karl will read Eric's written answers to some criticisms the Colorado Bankers Association made of the idea of public bank for Colorado and sent to the legislature last year. So they sent these criticisms and these objections to a public bank in Colorado to every legislator in Colorado. Then Mr. Bollingberg will talk about his experience as a private banker working with the Bank of North Dakota, after which he will answer additional questions that any of you may have for about 20 minutes. Mr. Bollingberg is also the current chair of the advisory board of the Bank of North Dakota and the vice chair of the Federal Home Loan Bank serving North Dakota and the Bank of North Dakota. So, Mr. Bollingberg, please take us on.
All right. Well, thank you very much. It's a pleasure to be with all of you this evening. And yes, as I said earlier, Eric and I go back probably to 1987 when we would have first met each other. He was at Bank of North Dakota. I was at the company that I worked for most of my career, Alerus. And we had the opportunity to work for virtually all of our careers together. And as you mentioned, I joined the advisory board of the Bank of North Dakota about 20 years ago. So I've been very familiar with how the bank runs and have been able to watch how the management of the bank has been very successful over a long period of time. So it's fun to actually be here this evening, just because my time with Bank of North Dakota goes back many years. So what I'd like to do now is share with you Eric's responses to the assertions that were provided. And I will go through all of those. And when I complete that, we potentially could open up for some questions. So the first assertion was costly to the state. And the response, obviously, there will be an initial capital outlay, as there is with any startup bank. Generally, there are minimum capital requirements that are required by state law. I'm not sure what that is for Colorado, but that cost will need to be borne by the taxpayer unless there are private fundraiser events to offset the cost. In our experience at BND, there was only the initial capital outlay of about $2 million. That was done through a bond issuance. That was the only taxpayer outlay, as BND was profitable from the beginning and never required any additional assistance. In its modern history, Bank of North Dakota has averaged a return on investment averaging between 16 and 19% for the last 30 plus years. In addition, BND has returned to the state an average of 55% of its profits in the form of dividends. Cumulatively, this is well over $1 billion. Today's assets are approximately 10 billion with capital of about 1 billion. The next assertion was put taxpayers at risk. Eric's response is banking by its nature implies risk, but structured properly with strong controls and good management that could be mitigated. I've always felt that if states were to start their own banks, management is key. You need to have experienced bankers run this bank and leave the economic developers out. However, if there are significant losses above and beyond what the capital plus loan loss provisions can handle, certainly the taxpayer could be at risk for further capital calls. The third assertion was violate the Constitution, and yes, Eric said Colorado will have to answer that. The fourth assertion won't work in an industrial state like Colorado. Eric's response is, I've always answered this the same way. It really depends on what you are trying to accomplish with your publicly owned bank. What issues are you trying to solve that are not being met with the private sector? In BND's case, we started off as really a solution, as an agrarian solution, as the issues were acute in North Dakota 100 years ago. This was expanded in the 1940s and 50s to be a purchaser of home mortgages. It expanded greatly in the 1960s by deciding it wanted to get involved in the student loan industry. Also, it was the same period that the current administration also felt that BND could play a role in financing economic development. This really has been the hallmark of BND lending practices ever since. This is done by working closely with the private sector bank and leveraging their money, local knowledge, and utilizing systems and documentation. Most, if not all, North Dakota bank and credit unions view BND favorably and see BND as a partner rather than a competitor. The fifth assertion was Colorado banks already meet the need for credit. In Eric's response, I refer back to my statement above. What niche or gap are you trying to fill that the private sector is not? I've always felt that if you cannot answer that question to the taxpayer and only want to set up a public bank to compete with the private sector banks, that is a recipe for failure. The community banks in North Dakota do a great job of providing credit and services to their customers, but they use BND programs to enhance their services to the clients. A great example of this would be our Partnership in Assisting Community Enhancement, or the PACE program. And he says Karl can talk about how his bank used this program to help their clients, and I'd be happy to expand on that when we get through this. Other questions? How does Bank of North Dakota handle the issues of providing security deposits? Since BND deposits are backed by the full faith and credit of the state of North Dakota, there has never been a need to collateralize deposits, and we do not carry FDIC insurance. Next question, what is the relationship with the Federal Reserve? Bank of North Dakota is a member of the Fed. We were long ago issued a routing number. We use the Federal Reserve liquidity programs and hold a clearing account with them. We are not regulated or examined by the Fed. BND is examined on a 2-year cycle by the North Dakota Department of Financial Institutions. We also are rated independently of the state by S&P. So those were Eric's responses to the assertions. And so maybe at this point, Alec, I would either turn it back to you, or if there's another specific topic you would like me to address, I'd be happy to do that.
I think that it might be a good time to have questions posed to you, and perhaps Eric as well, and he might answer them in the chat or use his voice even minimally if he chooses to do that. So let's have a show of hands in reactions. You can raise your hand there and ask your question. Okay, so I see Jim, Pa, and Dragan, and Marion, and then Ruth.
So this is Jim Paul?
Yes.
That's me, c'est moi.
Oui, c'est vous.
Yeah. Attaché Chevrolet Coupe de Ville.
Yeah.
Anyway, when I was hearing the first speaker, I'm so sorry, I forgot his name. Not Karl. The
Eric.
video.
Eric.
Yeah, thank you. Senior moment. He talked about there's no oversight, no FDIC oversight, and so I'm wondering what oversights the public banks have, especially when they said that banking examiners can examine the bank, but they don't have any legal leverage. So I'm just concerned about oversight.
So Karl.
Well, you know what I'd like to do is Eric should try to respond unless he defers to me. Is that okay, Eric?
Yes. Can you hear me?
Yes.
Okay. Well, excuse the voice. But BND is audited by an external auditor, a regional audit firm. And so with that, is a annual full-blown audit. We are also audited by other agencies, including, Federal Home Loan Bank, Fannie, Freddie comes in and examines our portfolios. Sally Mae came in and examined our student loan portfolio as well. And in addition, we are rated by S&P. So they come in annually and review the bank. We also have a very robust internal audit department that is helpful. So go ahead.
Yeah, so Eric, I think the question was going in the direction, if I might have guessed the direction, and that is, if you're audited and presumably nobody had to do anything about it because you were clean, as it were. But suppose the audits find something that is inappropriate or theft or some crime, something that should not be there. How is that dealt with? By which authority, in other words?
Yeah, and Karl, maybe you can chime in here. Obviously, the advisory board has certain duties, as well as the industrial commission. So why don't you talk, Karl, a little bit about the industrial commission?
Yeah, so in North Dakota, the Industrial Commission is made up of the governor, the agricultural commissioner, and the attorney general. And technically, they are the board of directors for the bank. And the only issue that really raises is it's hard for them. So I've served on multiple boards. So one of the challenges with the Industrial Commission being the technical board of directors is they're subject to open meeting rules. And so it's difficult to have some of the strategic type discussions you might normally expect to have in a board meeting. And that's really where the advisory board plays a role. The advisory board is just that. We are not technically the board of directors, but I would suggest that the advisory board is there to have the kinds of discussions that I think most typically would be found in a typical boardroom. And I think that's worked well over lots of years. And so typically what will happen is you would have an advisory board meeting. The appropriate things are brought forward to the advisory board, and then it goes to the industrial commission from there. And I want to impress on you that it is the industrial commission that is technically the board of the Bank of North Dakota. And maybe, Alec, your question, if there is something that rose to the level of fraud or embezzlement or those kinds of things,
yes,
it's going to, your outside auditor obviously is going to be playing a role in that, because that may be who identifies it, or they certainly are going to be raising the flag. Those kinds of issues would then come to the advisory board and to the industrial commission. And that's where you would be dealing with, how do you now try to remediate, or how do you go in and deal with that particular issue? Here's another example that I would give you is those of us that have served on boards, most corporations have a whistleblower process. BND has a whistleblower process. In that instance, if there is a whistleblower, it's a third party that's providing that service. If there is a whistleblower situation, myself as chair of the advisory board am made aware of that immediately, as well as the vice chair. And so that's kind of how those types of issues would come forward.
Okay, thank you. So Marion next, I believe, and then Ruth.
I actually don't want to ask a question, but thank you for this incredible presentation. I learned so much, even after more than a year and a half of going to our volunteer meetings. Alec, I just want to point out to you that there are lots of questions in the chat, and those, I don't know that everyone wants to speak up. So at the end, it might be good to read those questions and get answers from Karl or Eric. Thank you.
Okay, sure. Dragan.
Yes, hello. Thank you for taking my question. My name is Dragan Medjic. I'm a state employee of the state of Colorado, and I'm in the State Employees Union. One of the things that's always concerned us is the health of the state pension plan. And I listened carefully to the earlier explanation that, you know, the BND and the state pension plan were always clearly delineated, and, you know, not much interaction between the two. But one of the concerns we have here is that our pension plan has never really recovered from the 2008 financial crisis, and it you know, it has a couple of good years and then it plummets into another crisis every time there's another regime change, war, or global upheaval of some kind. So you have the situation where you have a pension fund that's having to put out money on a regular basis, but has a very unstable source of income and returns. So we had discussed one time here in Colorado about having the state pension plan put forward seed money or invest to create a state bank, and then using that as a source of income, stable and predictable income, to kind of offset the massive fluctuations that you get when you're, you know, mostly invested in stocks. So if anyone from BND can comment on that, whether that idea has any merit, whether if there's any flaws that jump out at you from doing that, and any other thoughts you might have. Thank you very much.
Well, Carl, you may have to jump in on this one, but BND does have a relationship with the pension program. In fact, they fund one of our programs called the Match Program. And so they use part of their fixed income allocation and use that to provide deposits at the Bank of North Dakota, in which we provide them, you know, a average CD return. And we use those deposits to fund significant economic development projects. And I think our agreement today allows for deposits up to somewhere around 400 million that can be used. Karl, can you add any more?
The only thing I would probably add is I think, and Eric and I talked earlier today, one of the things I think one needs to keep in mind is the earnings engine that Bank of North Dakota has become has been built over decades. And I think everyone has to remind themselves that you can't, there isn't a silver bullet out there that you can say, okay, we don't like the volatility and the pension, and therefore let's start a bank, and that can smooth out our return, or that can give us more certainty in our earnings. And while that may be the case, I would suggest that's probably something that's a long ways out, because like any business, if you're starting a bank, and I've been around banks that started from scratch, it takes a long time to get the foundation established to where you can generate consistent earnings year after year after year. And so that would be my hesitation, is that while long term that may be a solution, I would say that could be out 10, 20 years before you would say we have a proven track record of earnings that we can count on, and there's stable earnings that can smooth out some of the fluctuation that you speak of. It's not something that you could do in the near term.
Yes, and Karl, that is exactly the response we got from PERA, which is the Colorado Pension Fund group. They said, first start a bank, let's see how you do, a public bank, let's see how you do, and we will consider putting some of our funds there, given that they also haven't done very well at times. Yes. So let's see. Let me go to one on the chat, and then I'll come back to you, Ruth. From Danita Beauchamp, what happens when a loan recipient defaults on their loan?
So I can maybe, I can handle this one, Eric. So, you know, let me just take an example. So as Alerus has a customer that, let's say we need help from Bank of North Dakota because they need to borrow more money than what our lending limit would allow. And let's then say that that borrower runs on to some financial difficulties. Well, we as the lead bank continue to have the relationship, the direct relationship with the customer. And so we have it worked by specialists within our company to try to maximize the return. Bank of North Dakota is there. They're in the background. They certainly are as interested as we are in the efforts that are being made to try to either rehab or exit the relationship, depending on how well the company is being managed, and if management is capable and willing to take the necessary steps to get on the right track. But typically, Bank of North Dakota and the lead bank are working hand in hand. And if there is a loss, that loss is shared depending on how much of the loan was sold to the Bank of North Dakota. So they're in there with the same amount of risk that the lead bank has. And I would say all of my experiences in those instances where a borrower came onto some financial difficulties, the Bank of North Dakota was great to work with. And it's nice in those instances where part of that risk is being shared, and so that you're both in that together.
Very good. So Ruth, please, Fruland.
Yes, thank you very much. I really am happy that you're here, Eric, and hope that you continue to recover. Sorry, my camera is on the fritz. Normally I show my face, but not as made up as that one. I need some clarification. So I wanted to make sure I understood that the BND basically is receiving state revenues, and you leave the local communities, they have their own revenues through their local taxes. And does that include like your counties? Because of course they're the ones that fund school districts and that sort of thing. So I was just wanting to get clarification on that. And so that's the first thing. And then I've often wondered the difference between loans and bonds. And I really, with my non-financial brain, I understand the differences, but I'm not sure, is there a preference for one or the other, or is it a balance 50-50 with BND? So I'd like to kind of get some information about that. And so those would be enough for now. I'd be very happy if I could get some clarification on those two issues.
Well, let me take a run at that. First of all, bonds. Banks make loans, and so that's different than what you would find with perhaps a housing finance agency, which would issue bonds in order to purchase loans. So, the difference really is, loans are, pretty much transaction specific. Bonds, generally are larger in nature. But banks, for the most part, issue loans. So that may or may not clarify that for you.
Actually, that was excellent. You did give me the key I needed. Then part of it is specificity versus you need a lot of money, but you don't know exactly for sure where you're going to be loaning it out. So that really helps.
And so, private sector banks, our funding deposits come from state tax collections. Most private sector banks, a good share of their deposits come from people depositing money, buying CDs, checking accounts, savings accounts. That's the typical source of deposits. Banks will bid on municipal deposits and have a relationship Alerus, for example, will bid on Grand Forks, City of Grand Forks deposits. So that's the big difference. BND does not rely on individual depositors.
Okay.
Karl, anything you want to add?
No, I don't think so. I think you covered it.
And was I correct on it's state funds that go into the state state bank,
Yeah.
but not the county or the local community?
Yes, yes, that's the case in North Dakota.
Ruth, it's also the case, of course, that you might, in addition to a state public bank, you might have a city public bank, in which case the deposits, the taxes that are collected by the cities or the municipality go to that public bank of the city or the public or municipality.
Thank you. I should have mentioned that I am from Seattle, Washington, and have been working on a public bank for the last 12 years.
Yeah.
And we want to basically start with a clean, and we've had some good runs at it, but we need to start with a clean slate, I think, and really rethink how we manage this so we can be successful.
I've worked with Bob Hasagawa for quite a while. Yeah.
So,
Nicole Lycan has a question.
What's that?
Nicole Lycan has a
Yes.
question.
That's right. That's who I was getting to next.
Good. And whoever wants to answer this, I was having a little side chat with Walt earlier about banks and liquidity and working with private banks and liquidity and BND buying up liquidity that banks don't need. And I didn't hear it the first time this presentation was given. And it's certainly what we've heard from local banks is they don't need anyone to help them. They got all the money they need. And I just wondered if you could comment about, and I know that BND has created its own climate over 100 years in the state, so it's different maybe than what a lot of states would be dealing with, especially as a new public bank. But just how does BND look at working with community banks when interest rates rise and fall? What are some of the strategies that you use? Because interest rates were really low and not very profitable, but now they're going higher. And so how does that impact how you work with community banks and how that might impact those of us that would want to use the BND model?
Yeah, so the Bank of North Dakota provides and absorbs liquidity from banks. Banks have needs on a daily basis. They make loans, they may need funds. So the Bank of North Dakota provides what's called a Fed funds program, where banks can buy or sell money to BND on an overnight basis. And that happens every day, frequently, hundreds of millions of dollars every day goes back and forth between BND and community banks. Karl's bank may have, $50 million of excess liquidity on a daily basis. They will sell that to us. We'll buy it, at the Fed funds rate, and then go in turn and invest it somewhere else. If they need funds, on the other side, we will borrow them, lend them funds as well. Karl, you can talk about, maybe doing it on a loan sale, because your bank and our bank has done that for years, where we'll buy pools of loans and you'll buy them back
Right. And so what Eric's talking about is, you have the funding side, deposits that we think of that provides liquidity for banks. It's what they use to lend. Well, on the lending side, what we do is, recently all banks have had all kinds of liquidity because of all the stimulus that the government put into the system. Well, if we go before that, fighting for deposits was banks were fighting each other very aggressively. And so if you have more loan demand than you have deposits, you want to be able to keep lending. And you don't want to have to go to a customer and say, yeah, you know what, we don't have enough deposits, so we can't make that loan. And so it's not unusual for banks to say, you know what, I'm going to sell some of my existing loans to the Bank of North Dakota, so then I can in turn lend some new dollars. So you're just leveraging and being able to continue to borrow money. And whether that's for liquidity purposes or whether it's because a customer is growing more aggressively than maybe my legal lending limit allows me to do, that's really where you can lean into an organization like the Bank of North Dakota, and we can extend more credit than we would otherwise be able to. We can do it at times when we maybe wouldn't otherwise be able to because of liquidity. And so those are just a couple examples where you look at your liquidity situation, the last thing you want to do is stop lending. And so then you figure out, okay, let's lay some loans off. And the Bank of North Dakota has proven to be a very good tool in doing that. The other comment I want to make is, because I've heard it said that Colorado has banks that network with each other and they can buy and sell loans from each other. And I would say that's great. I mean, that's a great thing to have in place. But I also will tell you this, that I put together a participation desk at our company. And I know this, not every loan is created equal. And so there's times when you have a deal that you think is pretty good, but that network of banks that you're working with for different reasons decide, it just isn't quite right for us right now. I would argue you can never have enough people in the network to be able to get deals done. And I will also say this, that in my experience, when you have deals, the range of deals that the Bank of North Dakota does is broader, or they are more willing to look at deals than your typical bank or participating bank is willing to do. It's just what it is. And so what I found was, if the deal wasn't gold plated, sometimes it was difficult to find a participating bank. Bank of North Dakota was much more willing to be able to work with you, craft a solution, get a deal done. And that's just reality. And that's where I think the Bank of North Dakota has played such a critical role for many, many banks in our state.
That would appear to be a very important part of the answer to Nicole's question and the Colorado bankers' assertion that private banks don't really need a public bank in the picture. And that is, there are lots of underfunded opportunities that a public bank can make available in cooperation with the Federal Home Loan Bank and other programs that the community banks wouldn't know about and wouldn't be interested in, except for the participation of the public bank. Does that make sense, Karl?
Yeah, no, I think that's fair. Yes. I mean, I've seen situations where you have a deal and maybe it has a little more risky profile, and it may not be a large deal. Well, quite honestly, as I try to work in my network of banks, some say, well, it's not big enough for us to waste our time on. We don't want to deal with it. Or it's maybe more complicated than we want to deal with. In the banking world, people like things that are easy to understand, are well underwritten, and you just don't have to overwork yourself to get the deal done, because you want to keep moving on to the next deal. Where I would suggest the Bank of North Dakota, because we're in the state together, you roll up your sleeves, you figure out a way to get to a solution that works. And that's not always easy to find when you're working with other banks.
So, Karl and Eric, I'd like to turn now to Earl Stalen to give us a rundown of the kind of work that has been done in putting together legislation, both for state bank and also for municipal banks. And if you have the time and will to stay put with us for another 15, 20 minutes, we'd really appreciate that so that you and others can assess the work that has been done with respect to this aspect of public banking in Colorado.
All right. All right. Thank you, Alec. We've been working on two pieces of legislation for some time. One is a bill to establish a state public bank, pretty much on the model of North Dakota. And the other is a bill to authorize local communities and political subdivisions to establish their own bank. This is analogous, by the way, in Germany, they have what are called the Sparkassen. That's a group of publicly owned banks and nonprofits in about 1,500 cities that are effectively public banks. And they're basically using local money to invest locally in the same way that the public banks are doing elsewhere, with the exception that they take deposits of individual citizens, unlike the Bank of North Dakota and our model. Our state bank model calls for capital of probably 20 million or more dollars. And we need to come up with a source for that. But like the Bank of North Dakota 103 years ago that issued bonds to cover their initial 2 million of capital, Colorado could issue revenue bonds where the bonds will actually be paid solely out of the income of the bank. And the model that we've used, because of a problem unique to Colorado, is to make the bank what's called a Tabor enterprise, which is a self-sustaining enterprise. Of course, a bank is very good at sustaining itself, as the Bank of North Dakota has illustrated by being very profitable for a long time. The opportunity there is to be able to fund the bank without having to come up with tax money or even private investor money, except through these revenue bonds. And $20 million should not be that difficult to raise that way. There was also the possibility of using part of the stimulus fund from the COVID crisis. Some of that money may still be available. And there are several other potential sources of money. I won't go into those, but it would not be difficult at all to start a public bank at that level in the state of Colorado. All that's needed is the will to do it. And there's the argument that if you don't do it, your ability to have money for everything else the state needs is diminished, because the bank provides money that does not exist otherwise. It's able to generate new income and new money without raising taxes to fund everything. All these other things that people say we've got to have money for, and to devote some of that money as capital for the bank helps solve all of those other problems. So it's a mistake to think that you can't do it or that you shouldn't do it. It's actually something that ought to be done to protect the state and its money. The Tabor enterprise has a very important advantage in Colorado in that if you're a self-sustaining enterprise and comply with the rules for a Tabor enterprise, you are not subjected to the Tabor restrictions on either income or expenditure. And those limits have meant that states in a good year have to pay money back to taxpayers and can't use the extra income to meet a lot of the local needs. So having the bank exempt from that Tabor amendment is a very valuable way for the state to meet a lot of needs, again, without raising taxes. The deposits for the bank would be the state's deposits that are currently in major banks, primarily. We would not think, as Eric discussed for the Bank of North Dakota, we're not thinking of taking away the deposits of local subdivisions from that they are getting from that they are providing to community banks. So the bank would have a very ample supply of deposits based on its tax income, and all that revenue would from the state would go into the bank, just as in North Dakota. And we're confident it would be very well managed by people who are qualified to do that. And the bank can lend out 10 times its capital, which it would do, or a very substantial multiple of the capital. With 20 million in capital, it could lend up to 200 million in loans. I looked at the Bank of North Dakota's lending, and during the 2008 recession, it was actually lending more than 10 times its capital. And that was a very major achievement because it enabled North Dakota to be the only state that did not experience recession in 2008. And the bank made record profits each year during that period by increasing its lending and offsetting what otherwise would have been a recession. And it's a model for eliminating the chronic problem of bubbles and recessions. So our legislation also provides provisions that are designed to prevent bubbles from occurring, not investing in existing real estate, unless it's to support an owner who lives in it, preferably maybe constructing homes, affordable housing, which can be done through a public bank. And of course, as mentioned in the 3-minute video you saw at the beginning, all of the income from the bank comes back. The interest income comes back to the bank, effectively the taxpayers, and that can be used either to increase lending by increasing capital, or it could be used to share, and this would normally be done, share with the general fund of the state or the community. The bank, like the Bank of North Dakota, would not plan to be a member of the FDIC. The FDIC only covers $250,000 per deposit. Those can be combined to increase that somewhat, but that really would provide no benefit to a state of Colorado bank that would have at least 100 million or so in deposits. The coverage would be less than 1%. So there's no advantage to that. And North Dakota has done very well without that for 100 years and has many other checks of its own and within the state and from outside entities like the Federal Home Loan Bank, Standard & Poor's, and others. The bank would be a member of the Federal Reserve and would have a very similar relationship to the Fed as the Bank of North Dakota, which would include the ability to borrow. Last year, or 2 years ago, that was at the rate through the discount window of 0.25%, which would be very advantageous for the bank and help it make a profit. Well, that's basically the main provisions of a state-owned bank. There is a provision, an initiative that was passed that would limit the size of a Tabor enterprise that this bank would be over its first 5 years to $250 million in income. That could be done if the bank was very successful over its first few years. The legislature could shorten that 5-year period by new legislation, or it could wait for the 5 years and then decide to expand the bank beyond that capability. But as Karl Bollingberg pointed out, it does take some time to build up a new bank and build up its lending. The other legislation is to authorize local subdivisions of the state, which could also include school boards or universities, to have their own public bank. And those also would be on the same model as the Bank of North Dakota and would be Tabor enterprises as well. So with that really covers the state proposal and the local authorization. But there's a third issue that came up. We had a legal memorandum that was issued by the legal arm for the state legislature, known as the Office of Legislative Legal Services. And they concluded that a public bank established as a Tabor enterprise would not violate the Constitution, and it would enjoy the strong presumption of constitutionality. The opponents would have to prove the legislation unconstitutional beyond a reasonable doubt, which is a very high burden of proof. But the Office of Legislative Legal Services also issued an opinion that a home rule community might be able to establish a bank without state legislation if it confined its lending to its own community, say student loans within the community, or refinancing or financing its own bonds, for example, that would be strictly local. That may need to be researched further. I think it would be good to have a state legislature request further research on that point, but that would allow local communities and political subdivisions to establish their own bank if they are home rule. Well, that's pretty much what I wanted to say about our legislation. So let's turn it over to Marion Murphy, who is going to talk about the need to do some more organizing and fundraising and education on this.
Just a minute before we go to Marion, essentially the work that we've been doing over the years has been educational, and in particular also educating legislators as to the benefits of a public bank, both state and municipal. We haven't had very much response in terms of legislators picking up this legislation, supporting it and passing it. So now we're, without leaving behind the educational aspect, we're going in the direction of attempting to create a political movement that says, hey, we want this legislation passed because it benefits a whole variety of interests that have not been covered. So in that way of thinking, I give you Marion Murphy.
Good evening, everyone. Thank you so much for coming. We're a small group of people with an outsized desire to succeed. And we cannot make that happen without exactly what Alex said, a movement. which really needs to start with our citizens, because as we can see right now across the world, it is when the public becomes, the community becomes involved to take action that things actually happen. The rest of the time, we kind of do status quo. Please don't upset the apple cart, which I completely understand. But then along comes divine intervention, and we find ourselves with an upset apple cart and needing new ideas. So it's towards that goal, we need folks like you who are professionals who understand this is a very complicated and something that ignites a lot of people's resistance rather than joining forces. So we need people who are already understanding and willing to step up and learn more and teach their fellow citizens, their families, their friends, because really that's how things happen, through the community communication. And so as we go forward, we will want to have more communication with you, which means maybe more emails, but really always with a call to action. So right now we're kind of slim in volunteering time for people to come and share what we need to accomplish. And specifically in the legislation ports of that, it really takes boots on the ground. There's a lot of events that legislators attend. If you continuously speak to them, then they begin to understand this is something that my community wants. So I need to learn more. So they will invite us in to do presentations. Eventually that idea is to make it such a groundswell that they actually support legislation to be introduced. And then of course comes the wanting it to be passed. So towards that goal, we're going to have we already have a Facebook page for PB Can, which is our 501c4, which is a designation that the IRS gives so that we can do political work. We can get contributions. They're just not tax deductible, but they are a business expense. So there is an advantage to supporting us with money. And so we also have a donation link. I put both those things within our chat room here. We will continue to build on that. We'd like to create a network on LinkedIn, on Twitter, and have continuous education using those resources. And then finally, we would like you to help us raise money. And that could be anywhere from a small donation to whatever your heart's desire is to really get this done. And you will get more information about this in the future and how you can connect with us and let us know how you would like to volunteer, what you could do within your community and within your social circles via email. And that's it, unless you have any questions. We also, Alec, have questions in the chat which haven't been addressed yet, so it might be a good time to turn that over.
Yes. I don't know that it's 7:45, so I don't seem to be able to find them.
Would you like me to read them to you?
Yeah, or read one or two that you choose.
Sure.
I don't know why
Well, it's Zoom. Don't blame it on yourself. Here's a very long.
I think Earl answered most of them.
Oh, okay.
That's my sense as well, because I don't see anything.
The only one that wasn't answered is how many states are currently planning on introducing public banking bills, and I'm not sure if we know that information.
And also the other question that I saw was, do the advisory board get paid at all?
I can answer that one.
Yeah, because you are an advisory board unto yourself.
He is the chair of the
I know.
board.
I'm just making a joke.
Yes. So, we do get paid. I think the current stipend that we get is $189 a meeting. And I've given Eric a bad time for the 20 years that I have been on the advisory board. And it's gone up incrementally. It might have used to have been like 140. So we have gotten raises over the years. We do get our expenses for travel and lodging. We do get those paid. And I would tell you this, that the governor of North Dakota, both the current and past, feel as though those of us who serve, that's what we're doing. We're here to serve the state. And I can tell you this, for my 20 years on the advisory board, I'm not on there to get paid. I'm not on there for the money. It is about serving North Dakota. And you know what? That's not going to be an issue of a bank being successful or not as to how much the advisory